Of a special trading session that kicks off. We've already had the first hour of trade this morning. Trading volumes expected to remain weak, but it's a strong start. Good morning, Mahima.
Good morning, Samina.
Yes, it's expected to be a quiet day, but nevertheless, cues remain positive. We will take you through all the action, gear you up for trade. Even though it's going to be a quiet one, the exchange is testing the systems in today's trade. Well, a quick check of how the last hour of trade panned out, which was from, of course, 9:30 this morning to 10:30. It was a good day, to say the least, or a good hour, to say the least. The Nifty opened for the first time at levels of 22,400 and settled closer to that. We are expecting to see a similar sort of hour of trade in the next couple of minutes. The breadth of the market was good. The broader markets did well. Global cues have been positive. Feb actually turned out to be a good month, defying history. In fact, the last three Febs historically have been weak for this trade. This time around, the Nifty actually going home with gains in the Feb series. Well, beyond that, you also had March that's kick-started on a decent note. Inflation data from the Eurozone, the US, and of course, other parts of Asia, indicating that there could be an extended period of higher rates in that part of the world. But markets, for now, ignoring all those cues. A quick check of how the last hour of trade played out before I toss it over to Mahima for stock-specific trade. It did seem like it was a good day. Like I said, a good hour of trade. The Nifty ended around 22,395 and the Sensex gained 115 points. Broader markets have once again gone back to outperforming the benchmark index. All sectors have ended in the green, with the Nifty private bank actually leading the gains in today's, barring private banks, which ended the last hour of trade slightly lower. Well, the gains were led by auto stocks. Strong auto sale numbers, more or less in expected lines, but markets cheering that. Counters like Hero MotoCorp, Bajaj Auto, all ending up in positive territory. Tata Steel and Tata Motors back in the green, and you also had stocks like M&M, NTPC and Grasim that did see some selling pressure this morning. So that's largely been the trend. But Mahima, I think most analysts do believe the near term looks good. It could be another good month for the index.
Absolutely, a good month for sure, and a few stocks to watch that will be in focus today as well as in trade on Monday. Well, Asian Paints, now this is after Grasim launched its paint business of Birla Opus. Asian Paints has received a letter of allotting a land of 166 acres at Madhya Pradesh. Now, the capacity of the plant would be 4 lakhs kiloliter per annum, and the investment is approximately at 2,000 crores. Then we have a Torrent Power stock where the company has received a 2,700 crore order from the Railway Energy Management Company. The order is for installing 325 megawatt for renewable capacity. They've also received an LOA from NTPC with Vidyut Board Vyapar Nigam Limited. They're expecting a minimum revenue out of this at approximately 440 crores. We also have Hero MotoCorp, where it reported a total sales of 4.68 lakhs versus that of 3.94, and total exports reported approximately 23,000 units versus that of 12,000 units YOY. And then we also have a Welspun Corp, where company's unit has proposed to set up facility for plastic pipes and water storage tanks. The investment approximately stands at 400 crores, and project is likely to be implemented over the next 6 quarters. So these are, Samina, some of the stocks that will be in focus in the special trading session today.
Indeed. So it's going to be interesting to see how some of these counters actually react and trade. Remember, volumes are going to be very, very low, so don't expect moves coming in or very sharp moves coming in on large volumes. We'll highlight a few counters on pre-open trade. It's looking good. It's not looking bad, actually. 70-point gain in this trading session, and open again about levels of 22,400, 0.3% higher on the Nifty 50. 77 points to be precise is what we have in terms of gains. Well, the broader markets are looking good in terms of specific counters. Let's pull up a few stocks that are looking good. So you've got the mid-cap and the small-cap index doing much better than the benchmark itself. Stocks like Suvain have had a good day, so they may continue to see a rally. Auto counters may continue to outperform as well. You've also got some of those pharma names that aren't doing too badly. In trade, Tata Investment Corp, so the Tata Group companies as a whole pack is actually seeing gains. Tata Motors, Tata Steel looked good earlier. Tata Investment is now up about 5% in pre-open. We'll come back to take a check of this in a few minutes, but largely speaking, gains are in line with what was expected. Remember, global cues have been looking quite good. Trade has been about stock-specific action. Last week, there was a bit of a hitch with the SEBI, the regulator, putting out caution and advisory to investors to be wary of the froth in the broader markets. Preceding that, we did see the broader markets, your small, micro and mid-cap stocks decline very sharply. But of course, once the street made sense of it and rationalization came back to the street, and we did see the Nifty actually doing quite well and seeing buying coming in at lower levels. So the broader markets, of course, continue to be the sweet spot for traders. For some reason, capital market players are not looking too good in this one. So you've got IFL Finance, 361, all trading with a marginal downtick. But anything else that you're picking up on Mahima and pre-open? Of course, we could address this, but for now, it looks like a good start once again. Absolutely. Or a good end.
Yeah, absolutely. Well, there's one more stock which will be on the radar, that's InfoEdge, where, Google has removed the job search app like Naukri and 99 Acres from its store. And also Geo Financial Services, because the BSE Rejig came out yesterday, and Geo Financial Services has entered the S&P BSE Large Cap Index. Also, there will be stocks like JSW Infra, Tata Tech, IRDA, which will be in focus on the back of this rejig. And this is because they have been included in the S&P Mid Cap Index as well. So I think this pack will be in focus. Of course, hospital stocks have been seeing a lot of pressure since the past 2 days. However, today there was a marginal gain in the first trading session. So a lot of hospital stocks like Global Health, Apollo Hospitals, Max Health, Fortis, Yatharth will also be in focus, Samina.
Indeed, and auto stocks, that's going to be on top. Recall, we did see some gains on Friday. We saw some gains this morning, more or less on expected lines. Monday could be no different. You may see aggressive and active buying, follow-up buying coming into some of those auto players. Hero MotoCorp managed to see a sale increase of 19%. You also had Maruti doing quite well. TVS sales were up 16%, and their whole motorcycle sales was at 46%. So all in all, it's been a good month for auto companies. But let's move on to that very quickly. And before we get into market open, we've been witnessing a dichotomy in the consumption space. And while urban consumption has remained robust, rural consumption is yet to pick up. My colleague Neeraj managed to get a chance to talk to Frankel Templeton Senior VP Ajay Agrawal. Here's a piece of that conversation on consumption trends in the country.
Over the last many months, we have been a bit underweight on the consumption side, and especially the consumer staples. So as you highlighted, there is a dichotomy, and the mass market on the rural side, the consumption is more muted, whereas on the premium side and urban, the consumption is having a better growth. So we still think that going forward, that will be the case. And we continue to remain substantially underweight on consumer staples, because we have seen that even now most of the companies are having a lot of difficulty in having volume growth, and especially the companies which cater to the mass market or more towards the rural markets. And even when they are kind of cutting prices, the volume growth is not kind of improving. So which means that maybe this will continue for maybe some more months. So we are not positive at all on the consumer staples, and this is also need to be dovetailed with the kind of valuations they have been trading at. So in spite of quite a big slowdown in the growth, the valuations have not corrected anything meaningfully. So that kind of makes our underweight position. Whereas if you look at consumer discretionary, we have been positive on the pockets of it. So we had been positive on automobiles, which have already done well. So OEMs as well as certain auto ancillaries. And then we have some positions in the online food ordering, which is part of the consumer discretionary. So there we see that there is a decent growth both for the market as well as the market share gain from the other players in the food consumption, whether it is from the restaurants or whether it is from some of the other QSRs. So we are having substantial positions in those spaces. So there are pockets in the consumption where we see that the growth is better, and in some cases the company's profitabilities have improved, and they've got back on the, or rather got on the profitability path. If you look at the online food delivery, which was earlier making a lot of investments and therefore not so profitable. So these are some of the pockets where we see opportunities in the consumption space. But generally, mass market, we are still kind of cautious.
Well, mass market is still cautious, and that was very evident from those numbers that we saw in terms of rural consumption and agriculture, in terms of GDP reading. But remember, all these numbers are backward-looking. The dark horse most people believe could still be rural-facing companies on expectation that there could be a policy impetus over the next 1 year to help spur demand in the rural part of the country. Well, let's move on from that to one group of stocks that have had a pretty good run, and those are the Adani Group names. All those counters have soared. The Adani Group companies have soared nearly 300% in 1 year and up about 5,700% in the last 5 years. Remember, Adani Group stocks have witnessed significant investor interest in the last couple of months, evident from the notable surge that we've seen in some of these counters from Adani Enterprise to Adani Total. The group's performance in the third quarter has further bolstered the group's stocks to trade higher, which was evident from what we saw in trade on Thursday and Friday as well. Most companies are putting up a very sharp recovery after the US short seller Hindenburg research and report in Jan of last year. A number of factors have contributed to this very sharp recovery. Adani Group companies are also looking at their first US bond sale since the Hindenburg report that was put out last year. So GQG Partners, Qatar Investment Authorities are some of the other few that have contributed to the growth in the conglomerate. But we have with us Tushar, who's actually standing by to talk about the journey that Adani Group companies have had since that Hindenburg report in Jan last year. What does the picture look like now? Tushar Deep has got more on that. Tushar, it's been a good year. If you're an Adani stock investor, you would be smiling your way to the bank, and the growth ahead looks even more promising, right?
The Hindenburg saga seems to be firmly in the past, as it has emerged that the Adani Group is at its healthiest in at least 5 years. At least that's what investors' presentation shows. Gross debt of the Gautam Adani-led conglomerate has grown by 20% over the past 18 months to 2.26 lakh crore rupees. Over the same time period, the cash balance expanded by over 60%. The net debt to EBITDA ratio has improved to 2.5x as on September 30, 2023, from 3.8x in FY22. The 18-month period is crucial, as it was in January 2023 that the US-based short seller Hindenburg put out a report raising questions on the credit profile of the Adani Group. There's positive news on the operational profitability front as well. Adani Group's EBITDA has clocked a CAGR of 27% over FY19 to 23 and is seen at 7 times FY19 levels by FY27. That's almost a doubling year on year.
Well, now with us on the show, we have Vaishali Parekh, Vice President and Technical Research Analyst at Prabhudas Lilladher. Welcome to the show, Vaishali.
Hi, good morning. Thank you for having me on the show.
Good morning, Vaishali. So my first question to you would be the stock that has been doing much in the trade today in the first session itself, Suven Pharma. What are your views on that?
Well, so this stock has been in the limelight since a couple of days because, we saw a good run-up coming in, and I think it should continue to do well because the way technically we are looking at it, I think it has given a good uptrend formation, and it is also above 720, technically speaking. So I would say it can go towards 760, 780 levels.
Hi, it's also Samina joining in. I guess you're having a Saturday at home, but volumes are expected to remain light, but at opening around 22,400. What is this setting us up for in this hour, and also more importantly in Monday's open when everyone comes back to work?
So yes, 22,300 was quite a hurdle which we have been waiting for it to cross, and that is what has happened. So I think now the support levels are elevated to 22,100, and we have our projected target of 22,500 to 22,800. So view is positive, buy in dip. We have seen a one-way bounce back, so let's wait for a little bit of retracement for us to take a fresh trade. And those who are holding on should hold on. So
no fresh longs at this stage, but continue holding on to what is there. Is that right? Okay.
That's right.
Also, very quickly, Bank Nifty. What is the trade there, Vaishali, if there's one?
So Bank Nifty, well, we saw last week after a good corrective move, 45,800 was our support level, and from there we are seen a bounce back. So I would say the view is turning positive. Further conviction comes above 47,370 levels. We have tried to breach these levels, but we need to be convincingly above these levels, and the view is positive. So I would say somewhere around 46,900, 47,000 level, it would be a new entry zone. And I think further upside of 48,000 to 49,000 cannot be ruled out.
Right, Vaishali. Also, Jio Financial Services was added to the BSE S&P large cap. What are the charts looking like for Jio Financials?
So chartically, it is showing an uptrend, though of course I don't have much of a data, but my view stays positive with 300 now as the near-term support. And once we see a move past 350 levels, this stock is ready for 380 to 400. So it's definitely a trending stock. 300 should be the support level.
Right. Vaishali, one more stock, Wari, which has been on my radar. Well, back-to-back orders, 1 month, the stock is up around 52%. And recently also it got an order of around 1,400 crores. What does the charts indicate for this particular stock?
Well, I'm not tracking this. Is it a BSE stock?
Yeah.
Okay, I'll just have a look.
Yeah, sure. If not Wari, maybe Westlife Food or Welspun Corp or any stock in the hospital maybe?
Well, so Wari, I got the chart, and
sure.
I think, well, it is doing quite well. It is in an uptrend, and it's ready for a new round of momentum also. But now the support lies lower at around 6,000 or 5,900, and that's the level to watch for to get into the stock, because I think it is showing an upper circuit every single day. So, well, continue holding, not much to say.
Stay with us. We'll come back to you in exactly 2 minutes once I address the market open. A start about 22,400 is what we got this morning and what we're going to get right now too. Broader markets may continue to see some outperformance. Remember, volumes are light on the special trading day. It's largely put in place to be testing systems, but nevertheless, it's still an active day of trade, so we can't get our eyes off it. You will have counters in the auto pack that will be in focus. You will also have some of your private banks that have been on the sell side. The weakness may continue there. Adani Group companies have been looking good. Defense names like BDL and HAL have also had a good run in the last week, may continue to see some follow-up buying. Tata Motors, Tata Investments are some of the other ones that are looking like could have a positive start. But Vaishali, I'd love to come to you with one more stock, but I guess we'll just wait it out and see where we are getting a stop this morning. It'd be interesting to see how some of these counters react in trade. Don't forget, whatever we see today, we'll only see a follow-up action to take place on Monday. There'll be no more global cues to react to, so we're already doing that in today's day of trade. A start at 22,400 is what we have, 60 points higher. The momentum is there to stay from the look of it. Globally, things are looking good, and that's, of course, aided the momentum in today's trade. 22,400, it is oscillating at those levels. The broader market's not doing too badly either. The Sensex before that is up 76 points. Outperformance on the mid-cap space, and that's pretty much been the trend since that big fall that we saw on Wednesday. Small cap index also up 0.8%. The mid cap trading with similar gains, outperforming the benchmark and providing the much needed support. The breadth of the market also, I don't think, is doing too badly. Bank Nifty is on the edge, 30 points higher, so it's trading flat. Could potentially turn red in a few hours and some time, largely because private banks have not been performing in the last couple of weeks or months. Let's take a look at the breadth and see what the Nifty 50 contributors are getting up to. I would be guessing that the bias would be on the upside, and you would see a lot more activity. Oh, there you go. It's actually pretty cool. Largely, the bias is on the upside. You've got a handful of counters that are trading weak. I'll take you to the winners first, and it is the Tata Group names that are having a field day. Tata Steel, Tata Motors, Tata Consumers, Tata Investments on the broader markets, Tata TCS are all trading with a very, very clear positive bias. Tata Steel is up and about 2% higher on the counter. Hero MotoCorp, in fact, steel companies have been doing well, so it's no surprise there that you're seeing a big move on Tata Steel. Auto companies also having a good day on back of those auto sale numbers. L&T doesn't look too bad. Interestingly, tech companies are also playing catch up this morning. Defensive names like Asian Paints not doing too badly. ITC, DVs are also in positive territory. On the sell side, it is Grasim And no surprises there. The Birla Group company continues to see trading pressure. Axis, Sun Pharma, private banks, like I said, are doing badly. The Bajaj twins aren't doing too well either. And you've got HDFC as well. That's, oscillating between gains and losses. So all in all, Mahima, it's a good start. It's stable. It's low volumes. The breadth is good. Steel, Tata Group companies largely catching attention this morning.
Right, Samina, absolutely. Well, Vaishali, any views on Tata Steel, which is the top gainer on the Nifty 50 today?
Yes, so it has given a breakout. I mean, in fact, we have recommended this stock since yesterday because it was a decisive breakout above 145 levels. So our view continues to stay bullish. We are looking at a trading target of 160 to 170.
Shali, what are your top recommendations this morning? We forgot to ask you that and jumped straight into our stocks.
Well, so I'm looking at SBI, which we have already recommended, but it still continues to be a buy and hold because this too is ready for a fresh break. If you see the chart, well, on a daily time frame, it is giving a breakout above 777, and that would trigger further strength going towards 800, 820 levels. So SBI is still on my radar. And well, in the cash category, I'm just looking at Ease My Trip. Ease My Trip is getting into a trend, and right now we are seeing some pickup coming in. So I think with a support of 46, this can be considered a buy for a trading target of 53 to 55.
Any of those auto companies that you would be buying into? I mean, buying today, I'm guessing, for the March series.
Well, actually, auto sector has already surged very high, but one stock which is lagging behind is Ashok Leyland. So Ashok Leyland can be considered as a favorable risk-reward ratio. I would say that yes, 168 can be taken as a stop loss, and 178 would be a small trading target for now. If 178 levels are moved past, I mean, the stock moves past 178 decisively, it's ready for a further run-up. So as far as the stock which has been a laggard, I think Ashok Leyland is the one.
Right, Vaishali. The hospital stocks have seen a lot of pressure in the past 2 days, but today they're marginally up. Any picks from the hospital sector?
So, well, Apollo always continues to be our stock that we would always recommend. So, I would say, yes, for the longer term, also wait for it to stabilize. I think 5,800 acts as a crucial support. So, either you accumulate in tranches and take care of the support level and accumulate accordingly. Because for a long-term horizon, I think this stock could go towards 6,500, 6,700 levels. So, Apollo Hospital is one of them. And the other one which I'm looking at is Rainbow Children Hospital. That also chartically looks quite appealing to me. I mean, this is a good level because it has once again retraced. So I would say 1,200 acts as a support to buy this stock.
Very quickly, Vaishali, I remember up until Wednesday afternoon, before, of course, that advisory from SEBI came out, some of these defense names like HAL, BDL and BML were on a breakout. And I think a lot of technical analysts had buy calls on HAL and BDL specifically. And then those counters declined. And now this morning, not looking too bad from what I can see. How would you trade these stocks? Any of them looking good or indicating long calls at these levels?
So, well, these are the stocks which are already so very run up. Well, let's talk about HAL. I would suggest a good buy in decline. 3,000 levels would be a good level to get into the stock. As far as BDL is concerned, I think this too also is just consolidating. So I think for a longer term perspective, yes, one should buy. But the other stock which is to our liking right now is Zentek and also BEML. BEML technically very well placed. That makes a good buy at this level.
Just quickly pull up Zentek. It's looking, I feel like it's showing a 10%, 5% up move on Zentek. So it's already hit upper circuit. Vaishali, at what level would there be a good entry, assuming this closes at 954? If there is an opportunity to get into the counter on Monday, what is the level to watch out for? I have a feeling it may get another gap up on Monday.
Looks like, well, but if we are lucky and if we get a retracement of around 930, 920 would be a good buy, and look for a target of 1,050 to 1,100 levels in times to come.
Fundamentally as well, this has been quite a story. We've been tracking this one closely, and the order wins, the management, the IP that they have in this space is what's noteworthy. Well, technically as well, it looks good now is what Vaishali is indicating. Well, that's, of course, Zentek. A quick one on Z. There was, if we can pull that one up on the screen, that should be useful. They've, of course, there's been some development where they have gone to the Delhi court and said that Bloomberg has been putting out notes about the company that have been factually untrue, and Bloomberg has been advised to pull that down. The stock, of course, struggling at levels of 158, but Vaishali, after many days, the counter is in positive territory this morning, and more importantly, it's also out of the F&O ban. Do you think a trader could play a pullback on this one between 158 to 175, 180?
So I would say right now it is attempting to make a double bottom formation. So a stop loss of 150 should be observed because the previous low that was made was around, I think, 152. So I think a stop loss below 150 should be advisable to hold this stock, because in all likelihood, because indicators are showing signs of a pullback. So just for a pullback perspective towards a target of 165, 170, I think one can trade accordingly.
Right.
Right, Vaishali. So thank you for speaking with us at NDTV Profit. Now a quick time for a quick break. We'll be back right back.
Welcome back. You're watching India Market Close. We're going to talk about another IPO that's actually getting and attracting lots of investor attention. That's Muka Protein. The IPO opened on the 29th of Feb and closes on the 4th of March. It's already raised 67.20 crores from anchor investors, and the price band of this IPO is 26 to 28 rupees per share. Investor response to Muka Proteins remained overwhelmingly positive even on the second day, which was on Friday. The subscription status, I believe, stands at 6.97 times as per the data available on the BSE. And on day 2, which was yesterday, the retail investor portion has been booked by over 10 times, and NI portion has been booked by 6 times, and QIB portion is subscribed about 1.86 times. Well, we have with us Kalandan Mohammed Haris, CMD and CEO of Muka Proteins, now joining us to talk about his company and the growth plans. Mr. Harris, hi, this is Samina joining in. You must be fairly excited. I mean, this response is overwhelming, to say the least.
Yeah, good morning, Salina. First of all, I thank you for joining me on this show. Yeah, it's quite interesting.
Right. Mr. Harris, let's talk about business. You are in the fish protein business. Most of your revenue comes from outside. Give me a sense of what business is like, where is top line, what are margins like, and I believe you've also ventured into the insect protein business. What's the response been to that?
Yeah, well, if you say about top line, our consolidated figures, it was, last quarter, it was a bit of 10.11. The PAT was 5.44. So, insect meal also is contributing a lot henceforth in this revenue. So, I would say this is alternate protein what we have started. So our contribution to the export is about 60%, if you could say, in the ratio in the last 2024 year it was. So about 40% was, so normally it is 50-50. The domestic portion would be 50% and the international exports would be 50% share, market share.
So Harris, you said 60% of your revenue is coming in from outside. Can you tell me which are the key countries that you export to, and which are your main, your top 3 companies that make up your revenue?
Yeah, top 3 would be, Vietnam is the toppest amongst the exports, and next would be the China, and Taiwan, Malaysia, Indonesia, and some of the Gulf regions, and also say about Europe is also contributing a lot nowadays because there is a shortage of fish protein in this sector, and US also, of course. So all this fish soluble paste, what you're seeing, and fish oil, which is widely used in the nutraceuticals and pharmas, which is made to produce the omega-3 fatty acids. So Europe has a widely good market for this product.
That is, what are margins currently at?
Margins?
Yes.
From?
From the fish protein business.
Yeah.
Blended margins, domestic and international.
International, as I said, in an average, it would say 50% from domestic and 50% from, 50 to 60% we contribute from international, because there is a incentive from the government. We get as the export incentive, and in the domestic we have some taxation for the GST, which is being levied. But again, there are a lot of schemes which government of India has announced for Prime Minister Matsya Sampada Yojana, or the Brew Liberation of 2.0, and it's called as a rising sector as well. So even the last financial budget, Finance Minister has allocated a huge revenue for fishing sector. And even the state government has been recently, last couple of weeks back, has declared a lot of budget for fishing sectors. So all this put together, we feel that the margins would come into really big numbers. And also from insect meal, which is used from the India. It's a large agri-produced country, which a lot of wastage, and it has been gone to the landfills and destroyed. So wherein we convert it to the proteins, and again it is coming in the form of rich protein source for animals again, and that is widely used in the insect meat. Pet feed industry now. So basically, this fish meal is used in shrimp feed, pet feed, and cultured prawns. So wherein huge numbers of quantities required. If you say in 2000 until 2002, we have been importing fish meal from various countries like Peru, Chile, and so on, Denmark. And after 2002, we started India's first steam-dried fish meal, where you can meet the international standards. And we started exporting now from 2002. So we definitely, I would say, we are the part of Make in India concept as well, where 100% of import has been stopped since 2002. And you can only see the exports happening, not imports by the anyway. And even fish oil.
Mr. Harris, very quickly, you've managed to grow over 100% in the last 1 year in terms of volume growth. And in terms of value, I believe the number stands closer to 130 to 150%. Going ahead as well in the next couple of years, what is the sort of number that you're looking to grow at? Is it going to be 15 to 20%? Do you think 100% growth year on year is still possible because of the low base effect?
See, already we are in the main strategic locations already, but we are looking in a couple of sectors as well. Where we can just pitch in and make the revenues as much as possible. And also our capex has also been utilized almost everything. And this fundraising would be extremely exclusively for the working capital, which in sense will take the growth of the company. And also a lot of R&Ds we have been doing in our industry in terms of fish meal or fish oil or this insect meal. By the way, this insect meal is the first of a kind in India. And it was been widely used in Europe. Now Malaysia has started, but India, we are the first players. So the past 3 years, we've been a lot of R&Ds, and our technology team has been, scientists have been working very hard, and they got through these barriers, and we've been taking into the commercializing in a larger scale now, and this all will contribute to the revenue growth. And now we are only focusing on the OPEX as much as possible. So I feel I'm very sure that even our debt ratio, long-term borrowing is also very less compared. It is about 0.03 ratio, if you say. So I don't think we will have a lot of challenges in getting through. As you say, 15 to 20% would be the safer number, and we have been projecting much ahead of that. In fact, in coming years.
Very lastly, Mr. Harris, how much money are you looking to raise, and what will the funds be used for?
Well, now we about 224 crores, and the 120 crores would be utilized for purely as a working capital, and 10 crores will be used on our Entoprotein, which is our subsidiary again, and the insect-based protein, alternative source of protein. So there we use about 10 crores, and rest will be the general corporate purpose.
Right, so largely expansion. Any more facilities you're looking to add internationally? I believe you've got some manufacturing facilities in countries like Oman as well.
Yeah, we do have a couple of units there, and that also is contributing. The second plant also is going to be started next season, that is August month. So there the amount of raw material is huge, and the prices of raw material is also quite cheaper than what you do in India. So in this aspect, we can have a lot of margins into the revenue stream, and I hope 15 to 20% will not be a challenge year on year. But that's we've been consistently doing, and you could see the last year's performance as well. So in addition to that, insect protein, which is a circular economy, which earns the carbon credit again, and which has again a lot of ESG. So all these put together will have under the sustainability also, we are taking care of much on the sustainability aspect as well, and lot of schemes from the government and Gujarat. In fact, we have been being a lot of expansion in Gujarat. But that coast has a lot of fishermen community. We have been helping them hand to hand. Earlier, this fish was being thrown away or dried in the sun, and we were using for the manure purposes, something like that. But now this has a value, and we created a value on this. The past. I've been on this industry for the past 2.5 decades now, And my forefathers, from the 60 years of journey, I'm the third generation, in fact. So we know how to, convert into new technology and emerge as new things. As you say, steam dried. We were the pioneer to start in India. Now we started the insect meal. So several R&Ds, and later stage will be the nutraceuticals, which is omega-3s. We are just pitching on that. Post-IPO, we are planning on that. So that will have a huge revenue. Only Europe is doing, some Chinese companies are doing. Now India will be the first company to start this nutraceuticals, which will be having a huge market potential, and the price and the value for the omega-3 capsules. Yeah.
Right. Mr. Aris, thank you very much for talking to us. Good luck. It's exciting that you're in a space that is seeing the kind of growth and, of course, revenues and, of course, helping India turn from an importer of fish protein to actually an exporter. We'll take a break. The markets are holding steady. We'll come back. We'll talk to CG Power. This was the stock in news yesterday. This morning trades flat. But, of course, lots happening with the semiconductor approvals that have come in for them.
Welcome back. You're watching NDTV Profit, a special trading session that has been hosted by NSE and BSE today. Well, CG Power is in focus as government approves 3 semiconductor units and an investment of approximately 1.26 lakh crores. And CG Power has entered into a JV with Renesas Electronics and Star Microelectronics. Well, the investment is expected to be approximately at 7,600 crores. And we have with us Mr. Vachhrajani Srinivasan, the Managing Director of CG Power, on our show today. Welcome to the show, sir.
Yes. Morning. Thank you.
Morning, sir. So my first question to you would be that through this JV, what kind of revenue synergies are you expecting and what will this add to your top line as well as your bottom line?
See, I think we can't discuss these numbers. It is too early. It is a project implementation itself will take about 3 years' time. So I won't be able to give any numbers at this point of time.
Right. If you can tell me about the capacity of the plant and how the utilizations will take place for this plant?
So the capacity will get built stage by stage, but when finally implemented, we will be manufacturing about 15 million pieces per day.
Right. And in terms of capex, you'll be infusing approximately 7,600 crores, if I'm not wrong. How do you plan to fund these? Will it be internal accrual based, or will you be planning to raise any kind of debts?
So 7,600 crores to be implemented to be spent over a period of 5 years. Out of this, the equity will be roughly about 1,900 crores. The rest of them will be coming through both central subsidy and as well as state subsidy. And even this 1,900 crores at this point of time will have to be invested over a period of 5 years' time. So given the company's current cash position and expected accruals, we will be in a position to invest it out of our own funds. And also for the project, as of now, we are not looking at raising any big debt. But as we proceed, after a couple of years, 3 years, things may change. As of now, with the both with the capital subsidy and equity, we should be in a position to implement the project.
Right, Mr. Srinivas. And also, in your recent con calls, you had mentioned that your exports YTD stand approximately at 400 crores. Now, you have plans to, of course, increase these exports. Can you give us where these exports will go to in, let's say, FY25? At what percentage of CAGR do you plan to grow your exports? I mean, because they are margin accretive, of course.
This you are talking about the current business?
Yes.
So current business, we have 3 business lines. One is motor business, and then second is railways. Together, we report it as industrial systems. The second line is actually the power systems, where we manufacture transformer and switch gears. Now, exports currently in all the 3 businesses were constrained by capacity. In motors, we could not export all the while because our domestic demand is strong, and then our production also barely was adequate to meet the local demand. But now we are expanding our motor manufacturing capacity. This capacity will come in place partly over the next 3 years. And on the expanded capacity, we should be in a position to definitely export. So we expect at least I would say our desire is to export at least about 15 to 20% of the sales of the aggregate sales in motors to overseas markets.
Right. So the mix will be approximately 20% exports and 20% domestic sales. Okay. And also your margins are stable at 15 to 16%. With this new JV, where do you see your margins going at, let's say in FY25?
No, the JV is talking of semiconductor project, Okay. You are talking semiconductor project, it's a while away. It's about at least about 3 years through.
Your regular business as well as your semiconductor business?
No, that will be a separate company, so it will take some time. It is at least minimum period of implementation is about 3 years' time. And then it stabilizes, it takes some more time. Therefore, we can't talk about margins. In the current company, whatever you said, probably around 50% we would like to at least maintain all the time.
Right. And from your current business, the capacity utilizations are at approximately 75%. Do you see this growing in the coming future, let's say for FY25?
It will grow, but at the same time, we are expanding. So all the 3 businesses we are expanding. Switchgear capacity we are expanding. And the transformer, we are doubling the size from 17,000 MVA, we are going to 35,000 MVA. But since the order book is strong, demand is strong, inquiries are strong, our view will be that even on the expanded capacity, we will be in a position to reach at least 70-75% capacity in about a year's time.
Right. And Mr. Srinivasan, where does your order book currently stand at, and what part of it is yet to be executed, and how much of it do you expect to be executed by FY25? So
as of December 2023, actually, the unexecuted order book, we call it as unexecuted order book, is about 5,500 crores, which is almost a 35% hike from the corresponding period of last year. Inquiries are still strong. I expect this portion to be even a little higher by as of 31st March 2024. So this will get executed over the 12 months plus. So most of it will get executed in the 12 months, but I think there will be something more will get probably getting executed in the next financial year. But order book is still coming. The inquiries are there. In the power business, inquiries are very strong. We have inquiries for about close to about 9,000 crores. Many of them will get converted into orders over the next 6 months. So therefore, orders are there. Only execution is a challenge.
Right, Mr. Srinivasan. Also, if you can just give us an idea about the semiconductor part, well, what is the addressable market stand at, and have you already received some kind of commitments from any clients already?
No. So the Indian demand is expected to grow at least by about 15% per annum. See, globally, the market is actually about $18 billion US, very large market, and some of our partners may take some of the production for their own requirements. To that extent, there can be some order immediately. Then, as and when we start, when the project is getting implemented, the last phase, I think we will look at booking orders.
All right, Mr. Srinivasan. Well, thank you so much for speaking with us at NDTV Profit. It was a pleasure speaking to you.
Thank you. Bye.
Right, and one more management. Well, Welspun Enterprises has been rallying on the back of multiple crores of rupees of order win, and we had the management speaking with us today. We had a chunk out of it. Let's see what he has to say.
It's a 4,100 crore plus order. This order is also very important from a strategy point of view, because we want to build the company into providing solutions for all the water related matters. So we are already in distribution, we are already in the sewage treatment plant, and now it is an addition into water treatment plant as well. So this is strategically covering another sphere for us, which is important. In terms of this particular order of 4,100 crore plus, this order is divided in two phases. One is a design and build, which is 4 years, and then a 15-year O&M period. Important point that I would also want to mention is that these prices are escalating prices based on indices. So the current order value of 4,100 crores, when we actually end up executing, would be much larger.
Okay, so in the end of the third quarter, you had indicated that you're likely to get orders worth about 6,000 crores in the final quarter of this financial year. It just so happens that the final quarter tends to be fairly largish because a bulk of the awarding of these orders comes through in the last quarter seasonally, not for you necessarily, but for the sector in general. Now, from what I make is that at the end of the third quarter, your overall order book stood at around 8,500 crores. My first question then is that what is your current order book? And my second question is that does that mean that based on the kind of pipelines, and we have still a month to go, we could potentially see a higher than anticipated order flow for the fourth quarter?
So the current order book as it stands is about in the ranges of 12,500 crore plus. It is not accounting for the execution that has been done in the January and February. But yes, we would anticipate at least one more order before the quarter ends. So I would not say that I would want to change the guidance to any higher number, but I'll be happy if we are in the ranges of 6,000 crores and there around.
Right. Well, that's the management of Welspun charting out the growth trajectory for the company. In the meantime, the markets, like we said, are holding steady. We've got about 25 minutes to go before we start wrapping up today's session. Vijay Chopra, MD and CEO, Enoch Ventures, now joins in. Vijay, how are you feeling about the markets? On Wednesday, we had a bit of a hiccup with SEBI putting out that advisory about froth in the small and the mid-cap stocks. Of course, the markets saw through that and recovered quite smartly through Thursday and Friday. Do you think fundamentally the market momentum is intact? I do know that there won't be too many triggers between now and elections.
Well, Samina, I think that SEBI is doing the right thing. One, I would really appreciate the kind of strategy they have gone into. Now there is very less leverage in the market. Generally, when we saw the 2008 crash or even in 2020, the leverage was very high. The retail investors really were butchered. So one, they have reduced the leverage. Secondly, a lot of SIPs were coming, a lot of money was coming into the small cap space. Now, as we all know, in a small cap company, the number of disclosures or the exact business model at times is not very clear. So these are generally companies which have gone, you've had a recent, IPO, or, they are not very long in the markets. They're not there for very long. So the clarity which an investor should get is not actually there. So I think this is the right move. So money would flow into quality mid caps and large caps. I think there are lots and lots of large caps which haven't moved. So I'm sure that mutual fund industry has to do a bit of homework, and once that is done, the money would automatically start flowing into quality mid caps and large caps, where the risk is lesser. So it is just mitigation of risk. So I think markets has quite smartly digested this news, and it's holding up. So there might be other reasons why market falls, maybe global reasons. But yes, this particular reason, I don't think that we're going to see a major fall for this reason.
Right. Vijay, you've seen a big rally in the last couple of days. Steel stocks have been grabbing quite a bit of attention. We expected this to happen maybe a week ago when China, of course, came out with some of its liquidity measures. But local production numbers are also very impressive, and GDP reading has also fueled the rally for steel companies. Would you be looking to buy any of these steel counters at this juncture?
Well, I think there are good companies, especially in the mining space and the steel space. I like JSW Steel. Tata Steel has moved up, but still, again, in a correction, I would buy a Tata Steel. Apart from that, NMDC is one company which I really respect. So NMDC, GMDC, these are primarily companies which are into mining. So these companies seemingly look good with a longer term perspective. So I think that, especially the metal space, the government ones, NALCO looks fantastic with a longer run. I think Hindustan Copper, another very good company to have in a portfolio. In steel, I think Steel Authority of India in a correction, definitely you can look at. So there is steam left in steel. Secondly, the kind of budget outlay the government had for infra space, so a lot is going to happen. And it's still in the offing. I think that our markets are now discounting, or they are now capturing the actual value of steel companies which have been undervalued for ages. So we saw this up move post COVID, actually, where the metal companies have started coming out of the blues. But yes, I would say that there is still a lot of steam left in the steel companies, in the metal companies. So my first choice would be JSW Steel in the large caps.
Right, Vijay. Well, Mahima, this side, hospital stocks saw a lot of pressure in the last 2 days, and however, they're marginally up today, and this is because the Supreme Court directed central government to set standard procedure rates. Any picks from the hospital pack that you have on your radar?
Well, I suppose that there is going to be a knee-jerk reaction. We have seen the hospital stocks have started recovering a bit. But yes, there is a difference between the government hospitals and the private hospitals. Now, there would be also a differential in the billing. Definitely, the private hospitals charge a much higher fee than the government hospitals. Now, it is very, I think, this is a decision made in a jiffy that why not bring down the prices for the benefit of all the customers. But again, if you want quality healthcare, there is a lot of capex which these hospitals do. The infrastructure costs are pretty high. The employee cost is pretty high. If you want to attract good doctors who have worked abroad or who have a great experience, or you want to retain them, you have to give them a heavy paycheck. Now, from where would this come? This definitely comes from the billing. So I think that they would eventually come out of this. but would take some time. Would take some time, I guess. So I would not touch any of these hospitals as of now until the dust settles, and would wait for the direction.
Right. Well, 19 more minutes for the market closing. Now, before we slip onto a quick break, Tamanna, our colleague, spoke to the IT Minister Ashwini Vaishnaw, who laid down India's plan to become a global semiconductor hub. Listen in.
How much of fabrication, I'm assuming that's the full form of when we say fab or fabbing, I could be wrong. How much of fabbing are we going to do as part of our current plan? Is that going to be a smaller portion or a majority of it? I assume that's also what needs the most investment.
You're right, absolutely. We will be doing 50,000 wafers of this type in a month. We'll be fabricating 50,000 wafers of this size in 1 month. That is 300 crore chips in a year. It's quite significant, but I can say with good sense of confidence that because of the clarity of policy, because of the focus on getting the ecosystem in place, rather than pushing the project, making sure that the entire ecosystem gets in place, and the focus on getting huge pipeline of talent. We have tied up with 104 universities where training in semiconductor design and manufacturing and ATMP is being given. We have tied up with international institutes as well as our SCL Semiconductor Laboratory Mohali to train the workflow, the shop floor people, the clean room people. So all those things in place will lead to at least many more projects, at least 4 times or 5 times the investment that we have seen today in the coming 5 years. Because the base is there. See, this is the way world is looking. 10 years ago, most of the industry participants were saying, should we go to India? That was 10 years ago. A few years ago, as the entire policies kept on showing results, people started saying, when should we go to India? Now that the ecosystem is there, people will say, how soon should we go to India? That's the mindset change which is happening.
Welcome back. We've got about 11 and a half to 12 minutes left as we wrap up and wind up the special trading session this Saturday. It's looking steady. The Nifty 50 is closing below 22,400. At least that's the expectation from where things are right now. 39 points higher on the index. The Sensex also trading with a gain of 78 points. The broader markets are seeing some outperformance. The breadth of the market is biased towards the upside, so that's a good thing. Tata Group companies are looking good. Tata Steel is leading the gains, or was at least, and still continues to trade firm at 3.5%. You've also got some of the other counters that are having a good day. So Hero MotoCorp, Adani Group names, all trading firmly in positive territory. Vijay, it's been over a year since the Heidelberg fiasco that impacted those Adani Group names. The journey has been overwhelming. They've managed to, reward investors in a pretty big way. Lots of positive developments in the group companies of Adani as well. Would you recommend this stock or any of the Adani Group stocks to your investors? And which, if yes, which ones would those be?
Yeah, so I think that there are a couple of good businesses Adani has. One is Adani Wilmar, which I like, can be bought into. The other company which I like is, Adani Ports, which is a fantastic business. It is one of the best. So Adani Ports in a correction, I would recommend that anywhere, if you get it around 1,200, 1,250 would be a great level to buy into Adani Ports. I see a level of 1,500, 1,600 coming on Adani Ports. Second is Adani Wilmar. It is also planning to, do away with Wilmar's association. And eventually, I think they would be able to do. So I think Adani Wilmar, the kind of brand it has established, and the Fortune brands, they have a lot of products under Fortune. So Adani Wilmar also should do well. Enterprises, particularly, I think that although it's a mother, it has so many companies in its womb. I don't know how many companies are going to come out in future as well. So because Adani is also getting into defense, and I was talking to somebody. There is a business called Adani Future Labs where they are doing a lot of work in technology. So Adani Enterprises per se, I would say that if I get it below 3,000 would be a good level to enter. Right now, I won't be comfortable recommending Adani Enterprises. But again, ports and Adani Wilmar, and of course, if you look at the cement side, I think that Ambuja is still having a lot of steam.
Right. Vijay, thank you very much for joining us. We'll hopefully connect with you in a few days when the full trading session is underway. Thank you for taking our time on a Saturday and talking to us about your view on the markets. We've also got to the Ayush Mehta, who's joining in for the last couple of minutes of today's trade. Ayush, top trade as we go into the weekend ahead of next week.
Hi, good afternoon. Thank you for having me here. So there are two stocks which I'm liking right now. First is Bodil Chemicals. If you look at the charts of Bodil Chemicals, we are seeing a pending pattern formation on its weekly charts and an inverse head and shoulder formation on its monthly chart, where we have already seen the neckline breakout of 87.50 and it has sustained itself very well. Plus, the stock is well placed above all the averages. So I think Bodil Chemicals can be bought for a target of 105. The stop loss we have to maintain here is 86. There's one more more banking stock which we are liking right now is City Union Bank, CU. If you look at the CUB charts, it's a reversal trade. We are seeing a support from 200-day moving average. Stock was well placed above 200-day moving average, and it has shown a reversal from the lower levels. Plus, a downward sloping trend line breakout is also visible in this stock. Plus, a formation of cup and handle is happening in this stock in its weekly chart, but it's not done yet, so we're waiting for that as well. Plus, a reversal from oversold zone in RSI. So CUB can definitely be bought here for a target of 147 by keeping a strict stop loss of 134 here.
Right, Ayush. Well, Mahima this side. Any picks from the QSR sector? Well, Westlife is buzzing in trade today after the entire saga of the fake cheese thing that came out and then they clarified. Any picks from QSR sector? Maybe Westlife, Devyani?
Well, if you look at the Westlife chart, it is showing a reversal from the lower levels of around 760. It's actually a support zone. It is taking a support of boiling up bands right now. I think it can be bought at current levels. The first target we are looking here is 795, but the stop loss should be at 724, which is the lower levels of yesterday.
Does Adani Enterprise look, Ayush, this morning as well? It's doing quite well.
Well, Adani Enterprises is doing quite well. Yes, there's a inverse head and shoulder formation also on the 60 minutes intraday chart, but the neckline breakout is at 33.50. So once it crosses 33.50, it can definitely be what the targets minimum we are seeing here is 3,500. And if someone wants to invest here also, then they have to keep a strict stop loss of 3,300 right now.
Also, Ayush, Tata Steel started with a gain of 2%, currently trading with a gain of 3.5 odd. Last 5 minutes to go. Do you think a long trade on this one is warranted before we go into next week's trade?
Well, metal stocks are performing well today, and I've given buy calls on Tata Steel from 100 odd levels right now. Even today, it is looking very good, and Tata Steel can be bought. It should be a positional call, I feel, and it should be bought for a target of 180. The view will be around for 3 to 4 months.
Right, Ayush. Zaggle has been this one stock that I've been tracking, and multiple order wins. What does it look like to you from the technical aspect?
Well, it's a relatively new listing. It's been almost, it started in September, but the charts are quite positive. The data is not very much, so it will be a little difficult to comment, but the current situation is showing a breakout right now. So if someone wants to invest in this stock, it can be bought at the current levels by keeping a strict stop loss of 330 here, and the target we are seeing here is 395.
Right. Those are a few names that we are seeing quite active in trade. In the auto pack, Ayush, anything that you're constructive on at this stage? The numbers fundamentally are looking good. On the charts, Tata Motors, Hero MotoCorp, M&M is having a bit of a quiet start this Saturday, or quiet end rather, but anything in the auto pack that you'd consider trading for the March series?
So M&M has given a good breakout from 1,700 odd levels, and it has gone up to almost 1,980, almost 2,000 levels. So I think it should consolidate right now. But Tata Motors is definitely looking good right now. But it has given a breakout, it has given a breakout on the daily chart. It has formed almost open is equal to low. So Tata Motors can be bought. The first target we are looking here is 1020. The stop loss we have to maintain for Tata Motors is 974.
Right. Any picks from the power sector like Torrent Power, CG Power?
So if we look at the power sector, I'll check the charts of Torrent Power, and we are not currently reviewing power sector as of now, but I'll check the charts of Torrent Power. It is actually flattish right now. It is setting a support of the 20-day moving average, which is around 1053. I think that is a very slight sideways trade. So I feel Torrent Power should definitely be avoided here.
Ayush, very lastly, what is the trade on Bank Nifty? It's been a bit of a laggard in the last couple of months. We finally not doing too badly as we see it right now at 47,300. Do you expect outperformance to come from Bank Nifty?
Well, yes. So if you look at the charts of Bank Nifty has given a breakout of a downward sloping trend line on its daily charts. The trend line breakout was at 47,250. So there's an upside gap which Bank Nifty is filling right now. I feel there's a resistance at 48,000, then 48,340. So these two levels we need to watch for. If that is crossed, then we'll see a big rally in Bank Nifty. The downside support for Bank Nifty currently lies at 47,400 and 47,000. So it's going to be a range bound from next week maybe. And the breakout is quite visible with volume as well. So I feel once it crosses 48,000, then we'll see a big rally towards 48,340 to 49,000 levels also.
Right, Ayush. All the Cape Good stocks, Action Construction, Zentech, Triveni Turbines are up and about almost 4 to 5%. Any picks from this?
We have recommended Triveni to our clients as well in the last week, and it has achieved all the targets right now. So right now we don't have any picks on this.
And something like a GE and TD India, what about that?
Can you repeat the stock, please?
GE and TD.
Yes. So it's a trade-to-trade script. Actually, it is trading around 982. So the volume is very less right now, just 14,000 today. And I feel it is going to be a little sideways. So I think it's better to avoid this stock right now.
Right. And lastly, Jio Financial, since it's been added to S&P BSE large cap now, how does this chart look like for Jio Financials?
We have been bullish on Jio Financial from 270 levels, and we have been recommending this to our clients. There's a formation of cup and handle which is happening, and there's going to be a breakout above 330. Once it crosses 330, I feel this stock should be bought for a target of 350. If 350 is crossed, then we'll see a target of 380. The stop loss should be 318.
Ayush, one last stock, just one quick 20-second stock that you would buy right now or sell for Monday morning.
Well, it would be Capacide Infra. So if you look at Capacite chart, it has given a good breakout. We have already recommended this stock to our clients, and Capacite can be bought about at around 270. It is trading, so it can be bought for a target of 300. The stop loss we have to maintain here is 261.
Capacite Infra, that's the call for Monday morning. Ayush, that's exciting. That's a long call coming in. The stock is higher by 2% already as we close out today's trade. But Ayush, thank you for taking the time out, talking to us on the weekend. This was a special trading day to check the systems. But of course, much appreciate your time out for joining us on the show. Well, that's where we are closing. Continues to close sub 22,400. That's exactly what happened in the first hour. Right now as well, closing with a gain of 39 points with sub 22,400 on the index. 0.2% higher. So somber, light volumes, light close, and that's pretty much how we're going into whatever is left of the weekend. The Sensex is closing with a gain of 70 points. So it truly was a testing day of sorts. Let's take a look at the broader markets as well. There was some outperformance that came in. In fact, the mid-cap has had it pretty good. 350 points, 0.7% gain on the broader markets is what we had. The small cap and the mid-cap index both going home with a marginal, with a sharp rally. Under 1%, but 0.7% higher is what we have in the small and mid-cap space. A quick check on how Bank Nifty did and how the rest of the sectors have played out. Bank Nifty, after months of underperformance, or rather, after seeing Jan and Feb in terms of underperformance, there's a little bit of catch-up that's taking place here. Expected to close at 47,300, so that's a good thing, even though on terms of relative performance, it's actually been a flat morning for Bank Nifty as well. The first hour did see private banks ending in the red. Let's take a look at the Nifty 50. Let's see what they got up to. It was a morning when the bias was on the upside. Tata Group stocks had it pretty good. Even the close is seeming like it's going to be on the upside. So Tata Steel is your top gainer. Tata Motors is also up 2%. Tata TCS is also doing well. Titan went home flat. But all in all, Tata companies did well. Tata Steel, of course, gaining on pretty solid numbers that came in terms of steel. Production in the count is up 3.5%. Auto count is doing well. Adani stocks also having a pretty pleasant day. On the sell side, RIL was slightly weaker. M&M is not looking too good. So is not Sun Pharma. And some of your cement counters like Ultratech and Grasim also going with some weakness. So that's pretty much where we are wrapping up today's session. It was a quiet afternoon of sorts. We will be going into the weekend, but remember, global cues have been positive. Locally as well, we've not done too badly in today's session. So Monday will be exciting, but thanks for watching. With that, we wrap up this the show of India Market Close. Big thank you from Mahima and me. So thanks for watching.